So what are futures? Futures are another asset, kind of just like stocks, that you can trade. But futures are designed and priced and traded a little different than stocks. Futures are a lot like options. They give you control over something for a certain period of time. Now, kind of like options is you don't necessarily use it for that idea. You more of just use it as a system of leveraging your money and then buying and selling just to gain a increase or decrease in value of the underlying asset. And so what I mean by that is for futures here, they have a contract time, but you're not necessarily going to be holding it for that whole time. The whole idea is, basic buy low, sell high, and just reap that profit from that time that you're in the trade. And so with futures, it's just like buying stocks in a lot of ways. There's just different ways it is priced. At the basis of it, futures give you control over something. So for an example, oil futures give you control over a certain amount of barrels. And that is what you're essentially leveraging when you buy an oil future. If we quickly pull up this chart of a few different futures, you can see here that here is that oil futures. And when you buy it, you're essentially controlling 1,000 barrels of oil. And so as oil goes up, your position will go up in value as well. And then the same with corn. If you buy a corn future, you are buying control or theoretical control over 5,000 bushels of corn. Now, you don't really have to be concerned about all that. All you have to really be concerned about when you're trading is that you're just trying to buy at a certain price and then sell at a certain price for a profit. And these are the underlying assets. There's quite a few different futures. And so some of them are with more tangible assets like barrels of oil, corn, you have gold here as well. But then there's also just financial assets such as bonds here, and then also currency values, and then also index values. So a big one that a lot of people talk about and a lot of people reference to is actually the ES futures. And I have that up here on the chart right now. And that's just the futures that follow the S&P 500 stock market index. And this is just settled by cash. So there's really a lot of different assets that you can trade with futures. But in the end, it really just comes down to analyzing the chart and just buying and selling in positions where you want to profit from. Now, another big difference between futures and stocks is stocks always just go up in pennies and then dollars, and the actual price of the stock is how much you have to pay for the actual stock and each share that you buy. In terms of futures, it doesn't work like that. For instance, here, the ES futures is trading around 3,117. It's not going to cost you that much money to buy a contract of the ES futures. It's actually just going to require a certain amount of margin, which we'll get into a little bit later. And then every time the value of the futures go up, it actually doesn't increase by that numeric value either. So when a stock or a share goes up $1, the price of your share or your position would go up $1 for every share you have. It doesn't work like that for futures. Futures have what's called tick sizes and tick value. And we can see that here on this chart. So for here, the one we're looking at right now, the ES, it has a tick size of 25 cents. And so what that tick size is, that is the minimal chart movement or minimal movement that the future will go up and down. So for shares, prices can go up by pennies, but for this ES futures contract, it can only go up or down by 0.25 every time. So over here on the right side of this chart, there is numbers for every tick point that there is. And so that is the only value that you can actually buy into the contract. You have to buy in at 3117 or 311.25 or 3117.5. You can't buy in or ever get a contract at somewhere in the middle of 3117.6. It has to be in that tick value increments. And then on top of that, each tick has its own value. So for us, each time the ES market moves up one of those increments, that is not worth 25 cents like a share. It is actually worth $12.50. So your position will move up $12.50 for every contract you have, compared to moving up, if you have a share, 25 cents. And so you can see here, every type of future has its own value for each tick, and the ticks are actually different sizes as well. So here you can see gold, their tick size is 0.1, and then here you can see the euro is in a very, very small number that I don't even know how to say. And the corn here is actually the same as the ES. So a lot of it really, you have to really know and look up for every futures market that you're trading to really understand how much each of those is valued. And one thing to keep in mind is that these markets will move at different speeds. So you can have a market like the euro here that has a smaller tick value of $6, but it moves incredibly fast. And so maybe that $6 will actually get you more price movement in terms of dollar value for your contract than the 30-year bonds will, even though their tick size is 5 times larger. So the last thing over here is point value. So a point is just a increase of essentially 1 in the market. So for us right here with ES, that would be an increase from here, 3116, to all the way to 3117. And so that would be worth $50, because for the ES, that is 4 ticks. And so that comes out to be 1250 times 4, which makes that 50. Now you can see for these other futures markets, their point value will be a lot larger depending on how big their tick size is. Because crude oil has a tick value of 0.01, then you have to times that $10 here by 100, because it takes 100 ticks for it to make that 1 point change in the actual market value. So if we move to a chart at the ES here, you can see it moving between those tick values. Now I can quickly go in here to the active trader and just buy a contract for us, and we can see the value of our contract go up and down as the price movement. So you can see, so it went up 1 tick there, and it gave us that unrealized profit of $12.50. Now that doesn't, we don't have that until we close it, but you will be able to watch it increase and decrease as this goes up. Now, another thing that I did talk about earlier is margin requirement. And so every futures contract will require a different margin or amount of collateral you have to put up based on just which future you're trading. And so for here on the ES, if we click buy again, we can bring up this confirmation dialog, and it will tell us how much buying power effect it costs us. So for here, for on Thinkorswim, a futures contract of the ES costs about $7,000 of margin. And so that is how much margin requirement you have to do when just buying one ES future. And so that is a ton of margin requirement for a contract. Now, there are other brokers out there that require a lot less, because 7,000 is a ton for a futures contract, but it's kind of just to protect people, and because futures are really a lot of leverage in terms of how much it can swing in your account size. So if you just bought one contract, you can have $1,000 swings in just one day. And so if you were trying to hold one futures contract overnight and for multiple days, if you want to do a larger time frame swing, it would make more sense to put up this collateral. But there are other brokers out there. One that comes to mind is NinjaTrader. They only require $500 worth of margin for the exact same futures contract. Just keep in mind that you will want a decent amount of money in your account just in case that the market goes against you really quickly, because $500 is 10 points of movement in the ES futures. And so that can happen pretty quickly if you're holding something for multiple days. Another thing you can do as well is if a futures contract like this is too big and you wanted to be trading on a larger time frame. So because this contract size is so big, you can really only day trade with it unless you have a massive account. If you wanted to trade on a more daily chart, the swings on a daily chart are tens, if not hundreds of points for swings. And for one ES contract, that can be a massive amount of money. And you're not really going to be able to handle that with a smaller to normal sized account. Now, what they did just come out with are micro Emini futures. And so that is just MES, and there are other micro futures as well. And that's just a tenth of the size. So if I go in here and buy this, this is going to be, you can see the buying power effect is only $700, not $7,000. And so if we send that in, it's going to be the exact same contract and following the exact same market, but the values are going to be a tenth of the size. So here the market just moved one tick and we lost $1.25, not $12.50. And so if you're wanting to trade futures on a larger time frame or even day trade and just kind of keep your money small, this is a really good way to do that, because a 100-point swing will be $500, not 10 points, compared to having a larger ES future. Now, one last important thing about futures is taxes. They have a 60-40 rule, and this just means that 60% of your profits are counted as long-term capital gains and 40% are counted as short-term capital gains, compared to buying and selling stocks and options and a lot of other commodities are counted 100% as short-term capital gains unless you meet that holding for longer than 1 year rule. And so this can actually be a huge increase in the profit you're making from trading just because of that tax relief that futures bring you. Now, if you like this content, I have a ton more free videos that you can go check out on my channel, and feel free to subscribe. I also have a website with a trading course on it. If you want to go check that out, I have a link to that below. And if you have any questions, don't hesitate to ask them either in the comments below or send them my way via email or Facebook or any other platform that I have linked down below.